It is time now to look back at one of our open trades. Last week, both Mike and Carter said that shares of American Express were likely to move higher. Listen.
You also have this working into, and quite perfectly, right? It stops to the penny, it stops to the penny, it stops to the penny, and here we are yet again. Quite right, play for the breakout. So many stocks have already broken out. Amex is poised to do just that. I'm a buyer.
What I was taking a look at was an upside calendar spread, the February-April 130 call calendar. You could spend $1.65 for that.
Well, they nailed it. Shares of American Express jumping nearly 3% since that call. So Mike and Carter, congratulations both. So Mike, what are you doing with the trade now?
Yeah, so we'll obviously have to defer to Carter for his technical view. I mean, this has been a pretty orderly melt-up in the stock that we've seen. And the thing I would point people to is the fact that it still remains relatively cheap. And we're talking about a stock that's trading at less than 15 times full-year estimated earnings. One of the things that we wanted, of course, was for the stock to drift up to 130 or even slightly beyond it. It has already done that in the short time since last week. I might actually be interested in buying back that February call. It's actually not going to basically cost us anything to do that and just hanging on to the longer dated call at this point. Things are basically working in our direction. The thesis is looking good so far, and I think this is a way that we can actually hold a bullish bet for a longer period of time.
Right, sure. So a couple of things. One, it's still early in the goings. Two, a 3% move, while nice, you can have a much bigger move. Three, if you think about the stock being at 131 relative to where it was in July at 128, hasn't moved much in 8 months, so we can't call it extended. And then four, part of the premise here was that this was a catch-up trade with the market in general, and it's a Dow Jones 30 sort of heads you win, tails you win. If it's going to play catch-up, it's going to play catch-up. We think that's happening, and it will actually offer some defensive characteristics in the event that the market encounters trouble.
So I like buying back this short call and holding on to that long call for extended moves on American Express, because I particularly like the payment space here. If you look at other payment providers like Global Payments, you know, Amex is actually quite similar to that from the perspective, unlike Visa and Master, where they make 70-80% of their money on interest, American Express predominantly makes their money on payments. Very similar to, so I think American Express could trade at a significantly higher multiple.
Mike, final comment to you.
Yeah, I mean, the other thing I would also point out, MasterCard and Visa are obviously trading at much richer multiples. In fact, that's generally true in the payment space. American Express, to the extent that they have any credit risk, they have much better creditworthy borrowers. So, I mean, I rather like American Express. I like buying stocks that are cheaper than the market overall. And of course, you're trying to catch up to a market that just won't stop. So I think this, just owning that longer dated call is a risk mitigated way to continue to hold a bullish bet here.